want to introduce you to our latest deal in Atlanta, which is Avondale Hills. This is our 28th offering, and it's a beautiful 2023 asset, 240 units located in Decatur, which is growing and affluent suburb of Atlanta. What we're doing is we're purchasing this 240 unit A-class property core asset from the original builders. When it was first brought to market, it was listed at $76 million. $58.5 million is what we're purchasing it for. It's occupied now at 93%. When we got it under contract with us and our partners, it was at 85%. We were getting the discount at the lower occupancy, but now that's already relatively stabilized, we're still keeping the discount. Atlanta, Georgia is the MSA, the Metropolitan Statistical Area. It's located close to the Central Business District. Good unit sizes. Remember, millennials don't want huge spaces. They want more amenities. They want everything else. 800 units, 800 square feet approximately. This type of construction is called a 5-story sort of mid-rise wrapped construction. So it's like semi-garden style, but with the wrapped, meaning there's one built in a square with at the back of it, there's a parking deck. This is one of the first properties we actually have structured parking spaces, 340, plenty of space for all the residents. Why we love the deal? Superb location. This is the path of progress east of Atlanta, located where the growth is going, right next to Metro MARTA station, and it is close to tons of employers, and it's in a pocket where there's a lot of youth, there's a lot of wealth, there's a lot of income. Next, this is a newer product with severely below market rents. In some comparisons, we're $700 below market, and some were about $200 to $300. That is amazing. There's almost zero bad debt on the property. Plus, the county who has authorized the build of this property is giving us an attractive tax abatement as well, which also helps our returns. In terms of the value add, this is an operational value add. We're going to really put in the Viking style asset management that we know and know that's very effective. We're going to up-level the amenities. Organic appreciation is already happening. Our goal is just to take rents and ratchet them up to market. The look and the feel is exactly what millennials and renters are looking for right now.
We're going to operate this deal with a 3-tiered return structure: Class A, Class B, and our reserve class. But you don't always really see this kind of 3-tier return structure with a new construction kind of project. You can leverage a combination of investment classes to really maximize cash flow, appreciation, and the equity upside too. Starting with Class A really prioritizes cash flow. It's a 10% preferred return, but no profit sharing when we go to sell the deal. If you want a little piece of the upside when we go to sell the deal, Class B or reserve class might be a better option for you, or a combination. In Class B really prioritizes the upside when we sell the project. It's a 7% preferred return with a 70-30 split up until a 13% IRR, in which case it changes to a 50-50 split. The reserve class are slightly elevated returns for those that choose to contribute a larger capital investment. And Viking is giving up some of its own upside for those that write the larger check. It's an 8% preferred return with an 80-20 split, same thing up until a 30% IRR, then it changes to a 50-50 split. Now I want to get into more of kind of the aesthetics of the property itself. So first off, we have that tenant-only parking structure that sits directly adjacent to the property that Vic mentioned. And for one, it makes a ton of operational sense. Stacked on top of that, we have the modern fitness center. Now, this fitness center has modern equipment with state-of-the-art machines. It aligns with our goal that people plan a profit. We're really kind of pushing wellness and health, but it also aligns with the growing trends of a lot of millennials and a lot of tenants really prioritizing their own personal health and well-being as well. It's a great community building space for residents to kind of meet, socialize, and all work out together as well. Another great space is the modern lobby and the clubhouse as well. I really love the sleek and elegant design of this clubhouse. It really kind of creates a welcoming first impression of the property and sets the tone for the level that we're playing at. You can really tell that a lot of thought went into the design of the space, and it really is leaning into the young professionals that are prevalent in this area. So it's designed to accommodate socializing, relaxing, remote work, business meetings. And we also have modern amenities across the property as well. What we're really seeing, especially in the last year, 2 years, kind of post-COVID, is a flight to quality is rising in popularity among this younger renter demographic. And we're really catering to that with Avondale Hills. We have smart access controls, package delivery systems, valet, resort-style pool, billiards room, and that all adds to the experience that you'd expect to find in a newly built property. And that level of care is also carried forward into the interiors of the units as well, right? Spacious floor plans, private balconies, in-unit washers and dryers, modern appliances, granite countertops. Those are all high-level finishes that really bring that luxury feel into the home itself. no luxury amenity would be complete without a resort style pool. This really creates that luxurious and relaxing atmosphere. But just like the fitness center, it acts as a social hub, right? It acts as a lounge space with an outdoor grill area that's great for events. And there's even cornhole there. It's all tailored towards the young professionals that are prevalent in the market and prevalent on site as well. So the majority of residents on site work in the medical sector or in the education sector. They have an average age of about 35 and a household income over $80,000. And Avondale is really weighted towards these 1 and 2 bedrooms to really cater to that demand. If you see, there's nearly 30% income growth projected over the next 5 years. And it's really just a smart place to build. It's in the path of progress with high incomes, with a large rental pool to pull from. That's pretty much the perfect recipe for success. And you have the entire property that's surrounded by green space and kind of forest, which is also part of what makes Georgia so beautiful. Now let's get into kind of the rent comparison. Speed is great for the developer, and they did a fantastic job at actually building the asset. It also presents an immense opportunity for us to buy high quality product at a discount with the room to raise rents without doing renovations. By having occupancy approaching stabilization, it removes kind of one of the biggest risks of most new construction plays, which is filling that vacancy. And it really leaves room for us as operators to focus on raising those rents to market. If you take a look at the screen, if you compare rents at Avondale Hills to other new construction in the area, again, for similarly sized units, you'll notice there's about a $200 to $400 rent gap difference. We're taking rents from a low $2 per square foot to about a mid $2 a square foot. And our property management team, who's vetted our rent growth assumptions, who have vetted our expenses, believes that we can actually capture and secure higher rents as well. But that delta, that opportunity, that's our bread and butter. That's our opportunity to capitalize on.
In terms of demographics, a lot of these big institutions and like stores and companies have done their due diligence on where they want to put their roots down. So I think this place is vetted as a good location. There's going to be a shortage of housing. There's not much new supply coming online. So between the numerous employers, the economic strength of the tenants, and sort of the growth of where Atlanta's going, we feel very excited about this. There are luxury townhomes, and for Atlanta, the luxury price point, you can call it between $500,000 to $800,000. There's like a whole community back there of luxury townhomes that have been built, and they're fully occupied, they're fully full. That shows you the sort of the area and the capacity and sort of the wealth of that area. And I want to emphasize 3 things. 1, we have income growth. Number 2, we have rent growth. Number 3, we have population growth. And number 4, we have employer growth. When you have all 4, it really provides a powerful basis for you to buy an asset there. So you see Avondale Hills on the right here, and you can see in this 10-mile radius, there's this hyper connectivity going on. I mentioned the CDC, I mentioned Emory University, the DeKalb County has a huge government center. We talked about the metro station, Whole Foods is nearby. We talked about medical community in Atlanta, Grady Hospital, Emory University Hospital, Wellstar Health, all there. Then we have all the big Fortune 500 companies like Coca-Cola, Southern Company, Wells Fargo, Visa, Google, Microsoft, all within a 10-square-mile radius. Truist, Delta, Hartsfield. Hartsfield is only a 20-minute MARTA ride from across the street from the MARTA station. Not only is there a MARTA station across the street, but they're planning to do a redevelopment of that MARTA station to become mixed use. There will be a communal green, there's going to be retail, there's going to be a soccer pitch there, pharmacy, banks, restaurants, shops, and stores. It's all been approved, and it's going to start breaking ground in the next year or so, and it's all across the street from Avondale Hills. I mentioned to you our economies of scale. This is just a sample of our 10 assets that we have in Atlanta, and we've talked about the reason. So centralized property management, maintenance, streamlined operations, opportunity to exit to an institutional investor. We can sometimes combine assets together to create a larger portfolio if that's more attractive for pricing, and it really helps us. And then we can negotiate cheaper insurance because we own so many assets in an area. So let's look at the demographics here. You can see here that Georgia outpaces the US in a lot of the numbers. Georgia had the 6th highest rent growth in the US last year. I mentioned the Atlanta population growing. Here's an interesting statistic. So right now we're at 6 million. By 2050, they expect 9 million. It's taking the whole Denver MSA, bringing it to Atlanta in the next few years. That's what the population growth will be. Education is huge in Atlanta, right? We have Emory, Georgia Tech, Morehouse, Spelman, Georgia State, UGA. There's so many good schools in Atlanta, and it's one of the largest we have places that generate so many students, and all these students are looking for tech jobs or higher income jobs, which again help fill a lot of these apartment complexes. For those of you not familiar with Atlanta, there's plenty of attractions: Centennial Park, Coca-Cola, the Mercedes-Benz Stadium, which is going to hold the World Cup, Fox Theater, the Botanical Gardens. Median income of tenants is between $80,000 to $85,000. Atlanta's become a #1 tech hub. We've talked about that. There's tons of employment, tons of diversity. So when you invest in an apartment complex and the main employer is Army base, that's very high risk. You don't have that same risk in Atlanta because there's so much diversity in where the jobs come from. Why Atlanta is also such a catalyst for growth is because it's transportation hubs. We got the Port of Brunswick, the Port of Savannah, one of the fastest growing ports of the United States. CSX, the railroad, has one of its largest nodes here. Hartsfield is the busiest airport in the world. Industrial warehouse demand, and obviously the highway infrastructure. The economic impact of Hartsfield is about close to $71 billion a year. Atlanta has become the Hollywood of the South. Numerous Hollywood studios have migrated to Atlanta due to the tax benefits that are happening. Many of your favorite shows and movies have been filmed here. $4.4 billion of economic impact, tons of attractions. Something called the Centennial Yards in Atlanta. This is a $5 billion redevelopment project where it's going to be the home to obviously the Atlanta Falcons, the Atlanta Hawks, and the DC United soccer team. Huge mixed-use development. And all of this is going to happen by 2025, which is essentially in 18 months, because in 2026, Atlanta is going to host the quarterfinals for the FIFA World Cup. And so there's a fast forward in progress here. Lionsgate, another studio, decided to put their anchor down in Atlanta and built a $2 million studio in Douglasville. Porsche North American headquarters, $100 million headquarters, opened in 2015 for all the Porsche fans out there. Rivian had an electrical plant being built to produce their vehicles, and now with the recent sort of joint venture with Volkswagen, they've been bolstered and they're revamping to put potentially both vehicle productions in the state of Atlanta. But for those of you who are asking, hey, how can I get involved? Hey, how can I invest in this? One, you want to do it soon because there's already been a lot of pre-demand prior to this webinar. The self-directed IRA is a great option if you have an IRA that's not doing much, or if you have some money in a different IRA and you want to move into a self-directed so you can invest in things like real estate. If you have assets that are not getting the returns you want, you can always liquidate them and put them into cash and get into our deals. Self-directed 401ks, trust, a lot of different ways. And the minimum investment, guys, is $50K. So guys, scan the QR code, talk to our team. We look at, call it 2,000 deals to find 5 to 6 that would make sense. This is one of them. All right, guys, wish you well. Talk soon.